Bitcoin is currently in a bearish triangle and a descending pennant pattern. If we break above 69k, we have the potential to move up to 72k. If we can clear the 2k liquidity level, we could see a further growth toward to 84k. In this level, in 84k, we have, first of all, we have the CME gap. We could fill that CME gap and this level in 84k. This is the essential level for us, 84k. But however, the dominant scenario and trend at the moment is bearish. My preference is to enter short position. If we lose the 65k support level, we could decline to 60k and possibly even correct down to 58k. I prefer to enter a short trade upon losing this. And second, we have the liquidity at this shadow level, and Bitcoin prefers all the times to fill the shadows. And Bitcoin ETFs have seen consecutive outflows this week, mostly above 150 million, and we are not seeing any significant inflows. Overall market sentiment is predominantly bearish at this moment. A fractal pattern very similar to the previous cycle has repeated again in this cycle. If we look back at the 2022, after the initial drop, we formed a flag pattern, a bearish flag pattern, followed by the next bearish leg. Then we moved into the range, and after that we had a 51% correction until we reached the cycle bottom. Now in 2026, a similar structure is forming again. The first bearish leg, then the formation of a bearish flag, followed by the second corrective leg, and now we are trading inside a range box. If we experience another 51% correction, our price bottom would likely from somewhere between 34 or 38k. In the realized loss indicator, the on-chain indicator, which shows when investors are selling at loss, we can see that we have not yet reached a full capitulation phase. We have not seen a strong aggressive spike of a panic selling or complete surrender from those who are in the loss. There are still participants who believe this is a price reversal zone and that it is a good area to accumulate. However, we need to see a true capitulation phase where the majority fully surrender and begin selling heavily at a loss. In this on-chain metric, we should see a large spike in realized losses. Only then would it signal a potential opportunity to enter the market and start a DCA dollar cost averaging. Although the net unrealized profit and loss NUPL indicator, on-chain indicator, is still above zero, this indicator needs to drop below zero and enter the red zone to confirm that we have moved into the broad accumulation or capitulation phase. The optimal range for entering the market and starting to DCA would be between minus 0.2 and Mr. Crypto says that based on the RSI, we have reached a bottom, and the Ethereum also appears to have formed a bottom. He expects that we will likely see a refilled rally soon. However, I disagree with his analysis. In my view, after breaking down from its first bearish flag, Ethereum is now at the level I marked with the yellow circle. At the moment we are positioned there, and I see lower targets ahead between $1,200 or $900. I have opened a short position at this level with a stop loss placed above our key resistance level at 2,366 and targeting 1,200 and 1,000. Additionally, if we look at the Ethereum ETFs, the outflows are heavier than the inflows. If you enjoyed the video, make sure to subscribe to the channel and like the video. Peace out.